So you finally made a decision that you do want to move forward with buying a home. You did all that searching on Zillow and you found some homes that you wanted to break down and possibly make an offer to, and you haven't fully made a decision yet because you're a little worried, a little nervous about buying your first home or buying another home because you're kind of worried where the market is at right now, and just a bunch of other things that come in a way that bring up your fear and anxiety. It's normal. Most people are scared when they're buying a home. You should be. Buying a home is usually a six-figure purchase in most cases, so you should be scared unless you, can buy a home full price. I mean, if you can hire me, that'll be cool. I'm sure that you're kind of worried about making the right decision because it's something that you signed for, and there's a 30-year mortgage, so you're worried that you don't want to make the wrong decision. Well, you came to the right video because today I'm going to explain to you some of the top mistakes people make when looking into buying a home. And these are very common mistakes that I see over and over and over again in my career. And I wanted to make a video so you don't make this mistake. What's good, home buyers? My name's Chris. I'm a loan officer in the state of Florida, located in the Miami area. And I make videos to simplify that home buying process. So if you're looking to possibly buy a home one day, definitely hit that like and subscribe button so you don't miss out on this information I'm giving out to you guys, okay? In my previous video, How to Buy a Home in 5 Easy Steps, I basically went over the entire home buying process and I broke it down in 5 steps so it can be simplified for you as a future homeowner and basically just get the outline details of what it's like to buy a home. But in between those steps, so many mistakes can happen, and I've seen it before, whether it's the home buying part, whether it's the mortgage part, whether it's the title company, taxes, and so many other things. So I had to make a follow-up video just going over some of the top mistakes that I see as a lender, and I wanted to just share that with you so you can avoid some of these mistakes. All right, so I'll get right to it. One of the most common mistakes that I see all the time is buying a home without anything saved up. I always hear this all the time, people looking into searching up videos, buying a home with $0, buying a home with no closing costs. Those programs do exist if you want to just take advantage of, some programs that your county is offering, but it doesn't mean you have $0 in your bank account. It's one of the most obvious mistakes to happen, but it happens over and over and over again. And you just set yourself up for failure because, in my opinion, you really shouldn't be looking for a home if you can't consider the fact that you have at least 6 months savings. Think about it. When you get into the home, for most loans out there, you're going to be putting at least 3.5% down. So depending on what type of home you get, you're going to put a couple $1,000s down. So if that's your last $1,000, and you're basically gonna get an empty home. And I get it. You see all these people that tell you that they got into their home with $500 and something dollars. So it's enticing to actually see their success from going into a home without it putting cash down or just other programs that they qualify for. But this didn't mean that they didn't have cash in their bank account. It didn't mean that they didn't have a savings account. If you limit yourself to somebody else's story and try to fit that into yours, it's almost like one of those kids putting the triangle shape into the circle. It's just never gonna fit. So stop trying to listen to other people's stories of how they got into their home or things they did. Use it as an example, but always consider yourself first. Do what you need to do to have at least 6 months of that savings into your savings account. So if there's a certain case where you factor in the down payment of the home, you also factor in some closing costs, because a lot of people tell you about the down payment, but they don't tell you about the other fees that are associated with the loan. And I'll make a video about those other fees so you kind of have an idea of it. One of the second most common mistakes that I see happen all the time, probably more common than it should be, buying the home with the maximum amount they qualify for. Let's say, for instance, you get pre-qualified and the lender tells you that you max out at $350,000. That means that your debt to income ratio in most cases with most lenders is under 46% if you take out that $350,000. Is it okay to have a debt to income ratio of 46%? No, it's not. You should not put yourself in a situation where you're spending almost half of your income on your house. That's considered house poor. And on top of that, that debt to income ratio goes off of gross income. If you send a lender that you make $5,000 a month, there is a net income, and a portion of that is going to taxes, a portion of that is going to insurance, and just whatever else you split your income to. So you don't really make $5,000 a month, and that's what they use as the calculation for your debt to income ratio. So it may seem like it's under 46%, but you're probably looking at a debt to income ratio of 50% or above if you take out that maximum amount that you qualify for. Now, let that sink in. That's not calculating in those other bills that you have, like such as credit card payments or the utilities that you have to get for the home, or just anything else. It's a lot of controversy of how much your home expenses should be. I usually recommend to my clients, at most, your house shouldn't be more than 25% of your debt to income ratio. So meaning that whatever you spend on your home, all the costs associated to it should be under 25% of what you're making overall. So you should have 75% of income that goes towards other things outside of your home. When it comes to the financial aspect of this, just only using their friend that's a real estate agent as an option. Listen, I get it. You knew the person back in high school and, they gave you their milk at lunch and you owe them a big favor. So now that they're a real estate agent, you decided that you're going to get their home with them. I get it. It's a normal thing. It happens. I like strawberry milk, and if somebody gave me strawberry milk at lunch, I'm most likely you feel like I'm indebted to them for the rest of my life. And strawberry milk is pretty good. Long story short, the reason why this isn't the best idea is because just because your friend that's the real estate agent that you kind of knew, and even if you knew them personally, it doesn't mean that they're the best real estate agent for you. You have to figure out what's going to be your best decision. One real estate agent can't pull through. It's no offense to your friend. If they can't pull through like how you need them to pull through, then you're kind of in a bind, because now you feel like you owe that friend a favor, but you're going to be the person in the home. Okay? So you don't owe anybody a favor. You need to do what's best for you, and you need to exercise your right to shop around and, choose what lender or real estate agent that will work best for you. And I hear it all the time. Every time I'm on the phone with a client, I ask them, well, who's going to be your real estate agent? Oh, I have a friend. Well, I tell them, the options where, you can kind of choose around from multiple real estate agents, so you can see if one is, better at getting offers or better at finding, the right home and submitting the offers and getting their offers accepted, and vice versa with the lender. With the lender itself, you might have a friend that's a lender and maybe they are pretty good. But on top of that, what's their rates like? No matter who's your friend, when it comes to your mortgage lender, nobody has access to the interest rates to the banks. The interest rates are what the interest rates are, and unless your friend is the one funding the loan and it's a friendly finance option, chances are the same interest rate that they're going to offer to you is going to be the same rate that they'll offer some random person on the street. So shop around, figure out who's best for you, and then maybe if you have a friend, you can consider them, but let the friend know that, hey, I am exercising my right to shop around because I want to make sure I find a home that's best for me, and I want to make sure I find a mortgage company that's best for me. Another mistake that people make when buying a home is lowballing the seller. I can tell you what, when you lowball a seller, especially in a market like this, your offer is most likely not going to get accepted. Maybe if the property has been on Zillow for a few months, you can kind of go in and shoot some lower offers than what the listing price is. Right now is just not the time for that. I mean, there's a market. There's a seller's market and a buyer's market. You got to figure out which one you're in. And then you have to figure out the comparisons of the home. There's so many other pieces that go along with, making an offer. And if you just go straight in with no reason to just offer somebody $20,000 less, you're kind of losing out. Have they gotten offers from people? Has it been listed for more than 2 months? Did it just go online? You need to consider those things before you go ahead and just lowball a seller. If it's a property that needs a lot of work and the comparisons are looking bad, chances are you can maybe get away with lowballing the seller. But a lot of times, especially in a market like this, it's great to actually, offer, depending on how many offers that are on the property, offer a little higher than what they're asking for. And then when your offer gets accepted, now you start requesting seller's concessions. This technique works a lot more than just going in and saying, I'm going to take $20,000 away from you just because I can't afford that. And it doesn't work. So try to stay away from that. The fifth most common mistake that I see happen all the time is just understanding your situation. When I get on the phone with clients, the first thing, I just let them talk. I try to figure out what their goals is in buying a home. You need to spill the beans when you're speaking to your lender or you're speaking to your real estate agent. Let them know your exact plan of what you're trying to do when buying a home. The more you tell them, the better they can help you. I mean, we're literally consultants when it comes down to stuff like this. The questions you need to ask yourself are, what are your goals when you're getting into this home? Do you plan on moving within the next 5 years? What's the reason you want to buy this home? Where do you want to buy this home? What area do you like to live in? There's so many questions you need to ask yourself, because when you start game planning it, the risk goes down. But when you just go in and just, randomly say that you want to buy a home, the options there are enormous. We're going into a time where every Thursday, Friday, there's thousands of homes being listed. So the options are there. There's so many lending companies, there's so many interest rates, there's so many loans. And if you don't give anybody any information about what you're trying to do, it's going to be hard to narrow things down that'll work towards you. So what you need to do is figure out what you're trying to do in this home. Stop for a second and think, what are you trying to get out of this home? Is it an investment property? Is it a long-term purchase? Do you plan on living in the area for a while? Ask yourself all of these questions and then have them answered, and then provide them to your real estate agent. Provide them to your lender. So that way they'll be able to help you in the best way they could. So I just want to make a brief video about some of the common mistakes that people make when buying a home. If you found any value in this video, don't forget to hit that like button and then subscribe to the channel as well. See you guys next time.